Welcome back, everyone. Today's video is probably going to be a bit shorter than the past few. It's on boss resources. There's a few things I kind of just want to say, but really this one is kind of just more simple. Once again, there is a necessary disclosure here because I do own shares in boss resources. It is one of my middle positions, not a huge one, not a small one. So take that with what you will. Again, doesn't mean I'm suggesting it or suggesting against it or anything. So why is today's video much shorter than the other ones? Well, really it's because Boss Resources is like vanilla ice cream. It's not super fancy, not super large, not super low cost, not super big. The location is, fine, good. There's just nothing super about it, but there's nothing wrong with it, if you know what I mean. So I say there's nothing super about it. I may retract that. So here's what I will say. There's a number of people or companies, I should say, that discuss first mover advantage as if it is a very good thing, and it may be. But if it is, I think that Boss is something close to having said first mover advantage in that they don't need the price to be that super high, and they are ready and they have a lower time to production. So if there is an advantage to being the first mover, well, then if Boss might be something to look at. And that being said, I'm not 100% convinced that in uranium there is as big a first mover advantage. Why? Well, if you're going to hedge your production, hedge your sales so you can get into production, well, then is it necessarily wise to do so if it would mean locking in prices lower than you could get later? Again, that's a question for the CEO of a company and not for speculating on what someone might do in a made up circumstance. So that's my thoughts on first mover advantage. That being said, Boss, if someone was looking for who had first mover advantage, in my opinion, at this point, it looks like it might be someone like Boss. So in many cases, when I'm trying to value a uranium company, I look, well, a junior at least, I look at price to NAV. With Boss, I kind of look at it a bit differently. I kind of look at it as price to cash flow. Now, why is this? Well, they have they have the asset built. They still require more capital, but they do have access to that capital. They have a debt agreement in place for access to a lot of the capital. So the hurdle there is they need the price to go up to a point that makes sense for them. They access the debt, they get back into production fairly quickly, and then they have cash flow. And not only that, they have cash flow and they can build up their production a little bit. They're going to get to what, 2 million pounds, and then they have this asset that in theory can make money year after year until the asset is depleted or the price no longer justifies it. But if the price is locked in, then you get more assured time of profitability, but less potential upside. So there's a trade-off there all the time. But the point is, price to cash flow, if you could get into production, which I believe Boss can fairly reasonably. Now, another thing I like about Boss is that there's a low hurdle. Now, do I think that the uranium price will go to 65, 70? A good chance. At least 65, very good chance. 70 probably. We'll see how it plays out. But anyway, that's not what I'm here to discuss. What I'm here to discuss is that it's nice to not need the price to go to that level in order to make a minimum return. And that is one thing that Boss offers. You don't need the super price spike to go into production and make cash flow. They can make it work at 50 bucks and have decent, good margins. But can they have more upside? Yes. So that's one thing that's, contributes to vanilla ice cream. It's like you don't need something super special to have something that's good. So originally this video was slated for a few days ago, but then there was a halt and I kind of wanted to see what they did, how it went before sharing my views on this. And so they raised $15 million at a slight discount. And the slight discount, I mean, it's normal. I mean, sometimes there's more substantial discounts, rarely less than this amount, but it's slight discount. Now, ironically, again, this is more kind of average or okay decision, not great, not terrible. I mean, I guess I got a decent price considering where the stock has been in recent years, and they were to eventually need money, so they didn't necessarily have to do it now. They maybe could have raised a bit less. When I was thinking about, okay, if they need to raise money next, how much should they raise? I would have raised a bit less, but I understand why they raised this much. It's enough for them for a while. You don't want to have to constantly need more money. I mean, obviously, it's more dilution than was absolutely necessary, but it gives them a few years to get the company rolling. They have some cash on the balance sheet. If they need to restart, they can put it towards that. They can do a number of things with this, and they have some money, and they're not in a unfortunate position anymore. And on the other hand, on the other positive side, they didn't completely blow up the company as some have. Anyway, um, a fair amount. I'd have probably liked to see less, but I definitely understand them doing this amount. And that said, there may be some sprinkles with Boss. And that is they do have some decent exploration potential. The resource could be much larger, and if you consider that already they have potential to have a good lifed asset, if they can find some more, then this could be a small to medium, call it medium. Remember, this is vanilla ice cream we're talking about. It's not super special, but it's not terrible either. Small asset could be producing for a long time, and that could have some serious value if they're able to turn it into something or just keep making cash flow, maybe pay dividends, who knows? But the point is value over time. Also, they do have a bit of potential for expansion. Now, the feasibility study does say that they're going up to 2 million pounds, that is, per year. But they are permitted to export or produce up to 3.4 million pounds per year. Now, A, that could expand, they could get permitted for more. B, even with that, they could just over time expand to 3.3 million pounds. And again, will they? Who knows? But it's within the realm of possibility. And, it's 50% more than 50% more production than 2 million pounds. So again, there's some ways to advance this. So really, overall, this is just kind of a quality play in terms of they're ready. They can be quick to production. They don't really need that much capital in order to get into production. And they have an experienced management team so it's really, just good on a lot of fronts. Anyway, that's all for today. I know it was a shorter one and warned you about that earlier, but I hope you enjoyed. It's just not, I don't really have that much to say about Boss. I just kind of, you know, it's just there and good and fine and vanilla ice cream. And I want vanilla ice cream now. Anyway, until next time, have a great day.